What happens if we combine every BTC data point into one all-encompassing indicator? Well, of course, you get the Bitcoin everything indicator. But what if we can make it even better? Well, we'll jump right into it here with, who'd have guessed, the Bitcoin everything indicator here on bitcoinmagazinepro.com. Now, there are many different iterations of this from different analysts in the space, trying to combine multiple different metrics and methods and data points, try and give an all-encompassing holy grail indicator to try and predict when Bitcoin may be getting overvalued or getting a little bit underappreciated at a bit of a discount when we're at bear cycle lows. So, of course, I had to make my own, but I wanted to be a little bit different. I didn't want to just look at on-chain data, which a lot of them do encompass. I didn't want to just look at technicals, which again, a fair few many focus on. I wanted to try and uncover all of the influencing factors on the Bitcoin price action, not just on-chain data, Bitcoin fundamentals like the stock to flow, not just the technicals like power law forecasts. What I wanted to do is combine all of the Bitcoin trajectory catalysts. Now, what we can see from this chart here is these include the macroeconomic data. We can clearly see the influence of global liquidity on the Bitcoin price action. The BTC fundamentals, as Bitcoin is changing and evolving, the amount of circulating supply available and liquid is diminishing. On-chain data, of course, we have to include that, which will also include mining data, how bullish miners are, how much resources they're pouring into the network, and technical factors as well, which we can't deny. If everyone's kind of looking towards certain levels and we can see historical patterns in investor behavior, then it's kind of a self-fulfilling prophecy to almost anticipate Bitcoin to be a little bit overvalued or undervalued at certain levels. So as I said, global M2 on a year-on-year basis, big influencing factor. The Puell multiple, miner profitability, the Bitcoin MVRV Z-score. We also included, that's from the last video that I did, the Bitcoin baseline indicator, which we covered in a previous video, which I'll link below if you are interested in looking at this, which I think is a better model compared to the Bitcoin power law, for example, which can change its historical data. I won't get too into that today. The spent output profit ratio, the actual underlying amount of profit people are taking on the network, the active address sentiment indicator, how many people are using Bitcoin, and the Bitcoin Crosby ratio, one of the best technical indicators for determining when Bitcoin may be at a discount or potentially at a little bit of a peak. So what we can do, as I said, is combine all of these into the everything indicator, which has historically worked incredibly well. But again, we have to acknowledge Bitcoin is changing. Not just Bitcoin, macroeconomic conditions are changing. If we're on the cusp of monetary policy, stimulus and fiscal expansion like we've never seen before, then potentially using existing models and means of valuing Bitcoin could become outdated. We want something that can dynamically adapt to the changing conditions, not just in Bitcoin, not just its network, not just its use case and narrative, but everything. So what I wanted to do for this is actually take some inspiration from one of my favorite charts we have on Bitcoin Magazine Pro, which is the MVRV Z-score on a 2-year rolling basis. Because when we're accounting for the changing market conditions, we can see that Bitcoin is maybe having these diminishing price cycle peaks. If we just go back to the standard MVRV Z-score, what we can see and what many people are potentially worried about and pointing towards is we are seeing a trend of each price cycle top having a lesser MVRV Z-score peak, which makes sense. Volatility is diminishing. We're not going to have as huge unrealized returns for investors. And potentially now that we're seeing the institutional influence and lots of buyers who may never sell Bitcoin, again, that changes the supply and demand economics of the network. So the MVRV Z-score better accounts for this. And what we can see is looking at the previous cycle, we didn't have this diminishing peak. We're actually seeing very consistent peaks throughout the entire history of Bitcoin when accounting for almost this half cycle basis of rolling data. So I wanted to take some influence from this. And I would like to point out that this is something that we've covered actually fairly extensively on our site subscriber industry report list. I write articles every single week, and what we can see here is actually change the MVRV Z-score. So rather than looking at it on a 2-year basis or a standard non-rolling basis, if we actually change it to a 4-year basis, this might be even more accurate. And we can actually apply this method to pretty much any different metric to give us this rolling model of data. So what we can do is if I just go onto TradingView here, what we can see, this isn't the everything indicator as you know it. This is changed to be on a 2-year rolling basis. So we can still see there's big peaks as Bitcoin is topping out and there's big spikes to the downside as Bitcoin is bottoming. But as I said, it's on a 2-year basis. And rather than looking at typical levels where everyone looks towards on this standard everything indicator, if I just quickly go back to it here, when it gets to this like 80 level, this really overheated level, or down to the 20 really low region, if we actually look on a more dynamic basis, if we look to when Bitcoin is its top 5% or 10% of overheated days, we get a much better indication of when the market may be topping out or bottoming out on a more variable basis, something that's evolving to the changing market conditions. So if I, again, just draw some levels onto this chart, which outline the bottom 5%, which is roughly around here, and the top 5% roughly around here, then suddenly we get this metric, which is incredibly accurate at timing the Bitcoin cycle bottoms. Again, all throughout this Bitcoin cycle, we could see every time this bottomed out, it gave us a really good opportunity to accumulate Bitcoin at a massive discount. But as well as that, as Bitcoin was topping out, not necessarily a big market cycle peak, although it did identify them as well, we're actually getting Bitcoin's big, massive moves to the upside before we have these more extended periods of drawdown. So if we just scroll to the current cycle again, we can see on multiple instances, we actually came into this upper region, the upper 5% of days on the Bitcoin 2-year rolling everything indicator. And we can see as these occurred, it preceded Bitcoin's long, drawn out, choppy periods, grinding down price action, which of course you were experiencing this as well. Really boring, really painful to live throughout. But we can see this picked these up perfectly, actually much better than the standard everything indicator, which didn't necessarily reach these overbought, massively overextended to the upside regions. So evolving data which can dynamically adapt to the changing market conditions gives us a much clearer indication of where the Bitcoin market may be in this current cycle. And what we can currently see is this cycle still has considerable room to go to the upside. So I think if we can start adapting more metrics to look at a rolling basis, start adapting and changing their formulations to account for Bitcoin's supply and demand economics changing and this narrative shifts, then we can have potentially even more accurate metrics to look towards. And I think this is one that I'm definitely going to be paying very close attention to throughout the remainder of this Bitcoin cycle. And if it's something that you like, then I can definitely provide some more updates when we start getting into these very overbought regions where the Bitcoin market cycle may be topping out. But again, just to reiterate, we still have substantial room to go to the upside. And if there are any other indicators that you have in mind to start formulating on a basis like this, on a more 2-year, 4-year, 8-year rolling basis, then please let me know in the comments below. I'd love to make them and cover them in a future video. So just to summarize, the Bitcoin Everything Indicator collates data from a number of different influencing factors on the BTC price action. Many investors often get too focused on just macroeconomic, on-chain or technical data, for example. So when we look at all the influencing factors and acknowledge all of these catalysts for Bitcoin price action, we get this confluence which provides a much more likely outcome on what is upcoming for Bitcoin. If everything's pointing towards a market cycle peak, it massively increases the probability of that being the outcome. Whereas if just one or two are pointing towards, we could have had some anomalous data, or potentially some models just aren't as accurate going forward. So when we actually put all of these together, it reduces the chances of potentially being duped out and faked out by just one metric, potentially not living up to its historical expectations. But what we also need to acknowledge is that Bitcoin as a network, technology, and monetary asset is evolving. We've gone from an electronic peer-to-peer currency to now a store of value, which was mainly traded previously by retail, to now big institutional and potentially sovereign state holders, which of course is changing how Bitcoin is being used as a technology, used as a network, and being held and stored as a monetary asset. So if we can dynamically adapt our metrics to these changing conditions, we can be more certain of their accuracy going forward. And when looking at the Bitcoin Everything Indicator over a 2-year rolling basis, I think it looks incredibly accurate and useful going forward. So it's definitely one I'll be watching. But like I said, if there's any other metrics you'd like to see tweaked or adapted to, or just anything else you'd like to see, then please let me know in the comments below and on social media. I'll look forward to reading and replying and hopefully building quite a lot of them. And as always, thank you all very much for watching, and I'll see you in the next one.